So bonds are fixed income securities that are issued by corporates, banks, public sector units, and even the government to raise capital, against which they issue bonds which are given to the investors who have put in the money. Now, bonds are a very dominant route of raising money by entities across the world to fund their businesses, to scale up their businesses, and you know get money basically to run their business, right, on an ongoing basis. From the investor's perspective in today's world, especially in the Indian context, given that bank FD rates are pretty much on the lower side of around 7.5%, a well-rated bond will offer anywhere between 8 to 10%, right, which is significantly higher than the traditional bank FD rates. So for investors also, this becomes a very lucrative asset to put in money for their fixed income investments and generate passive income source, diversify their portfolio, and reduce the risk on their overall portfolio holdings. Now coming to the risk involved in bonds, yeah, like any financial securities, bonds also do come with their risks. But then it is important that when an investor invests in these assets, they do a proper due diligence of the entities in whose bonds they're investing. But when you look at the risk spectrum of various financial securities, first, the safest ones would be traditional bank FDs because RBI gives a protection of up to 5 lakhs. Then after that, it would be bonds with respect to securities and safety. And then finally, it would be equity, which will include equity and equity mutual funds, so on and so forth. So that's about the risk profiling